So let's talk a little bit about some of the things that are dependent on economy, dependent on interest rates. There are certain financial vehicles, I guess we could call them, where there's there's a good time. There might not be a good time for these things. Bonds are one of them. They are kind of dependent on interest rates. And Jay, what's going on right now? Is this a good time to buy bonds? Because all I hear about is this fight with the Fed and the interest rates. President wants it lower. The Fed maybe wants it higher. Then they sit still. Is this a time to be looking at bonds, or is this kind of a time to kind of let that simmer?
Yeah. Well, let's start at a high level and work through the problem like that. Is there a place for bonds in your portfolio? And that question is going to be answered by, well, what stage of life are you in? How much risk are you prepared to accept? What are you trying to achieve here, right? So we've got that whole thing. But, more and more, the issue that has been coming up, and this is something you could see the stage being set for this in 2022, 2023. And we had a listener from the show come in and visit with us. I don't know what it was, 4 or 5 months ago, who has found himself in this situation. And that is the issue of what we call reinvestment risk. Okay. Very often you should have diversity in your investment portfolio. Can we have some bonds? Yeah, there might be a place for that. Should we have some equities? Yeah, we've got some risk there, but we need some growth. Should we have some guaranteed income? Maybe we should have that as well. What happened towards the end of 2022, 2023, is more and more we saw people that were just loading up on bonds and CDs and money markets because everybody was so excited that now we can actually get some sort of return, right? Pretty much since 2008, 2010, if you looked at bonds, you looked at CDs, you looked at money markets, you were getting nothing. I remember as an advisor back in the day looking at money markets, and they were actually paying 1/100%, right? It was 0.001 is what they were paying, right? Just nothing. And so, it's sitting there doing nothing. And so as we went through that tightening cycle and raising interest rates in 2022, it had been 10 years almost since people had saw any sort of decent returns in money markets and CDs and bonds. They all tend to travel kind of in the same direction when we're talking about rates. And what people started doing was putting everything they had into bonds. And we saw it come through over and over. And this particular gentleman that we had from the show who came in, he put everything into bonds, and he put them into 2 and 3 year bonds, and he was getting 5 or 6%. And then some of them were shorter duration, and he renewed those. And I wasn't getting 5 or 6, but I was getting 4 or 5. And now those renewals are coming in, and they're not 5 and 6 or 4 and 5. It's in the 3s, right? And if you say inflation is 2.5%, 3%, you're really making nothing. You're making no growth. And that's always the risk with this is reinvestment risk. Okay. Are you thinking far enough ahead about what is your next move? And all these people that were, hiding out in money markets for a long time, our conversation would be with them is, yes, you're getting 5% now. In 12 months, you might be getting 4. Now we're down to low 3s. What's the next play? We need to have something else set up. So can they play a role? Can they be strategic? Can they be a lower volatility area of your portfolio? Absolutely. Don't fall for the trap of getting everything into one bucket. The same's true of the equity portion, right? We talk about this. Do you need some growth? Yeah, you need some growth. Be careful how much risk you're taking as well.
It's kind of interesting to me, the solutions that they have for, quote unquote, the air quotes here, the retirement crisis. So, for instance, Social Security age was, 62. They're talking about moving that up and moving it to 64 or 65. The full retirement age used to be 65. Now it's 67. They're thinking about moving it up to 68 or 69. Just push that out further and further and further. There's a story here that I have in front of me that since pensions have gone away, a lot of people retired at 62, but the pensions went away, and now people are pushing their retirement age much later. So, Jay, is pushing the retirement age, is retiring later, is that really fixing the problem? To me, it's just like it's pushing off the inevitable. Maybe you don't need as much money because you're going to work for 2 or 3 more years. But does that really help this problem that we have of funding our retirement?
Yeah, so this is what you're going to find, and it's a common misconception, is if you look at retiring, let's call it 65, right? So you've been working since you were, whatever, 15 or 20, and so what have we got? We've got 45, 50 years of work history there, of paying into Social Security and hopefully saving for your retirement, okay? So very often the thought process is, well, the situation doesn't look great here at 65. Well, I'll go to 66. I'll go to 67. You're trying to change 40, 50 years of working and saving by adding 2 years to it. That's like trying to turn the Titanic on a dime, right? It's the difference. Now, could you say, I'm going to pay off some debt in that time, get very aggressive with the down? Yeah, like those things can play into it. But at a high level, is your situation going to look dramatically different because you work an extra year or two? It really doesn't for most people, right? And this is really coming back to what we talk about a lot on this show, is that your retirement is not going to be like your parents or your grandparents. It's just not, right? A lot of them had pensions. They could take Social Security earlier. We talked about those different ages, right? They could get their full benefit a lot earlier. And I think it's almost guaranteed that at some point in the future, those age changes, they happen.
That part of the equation here is glaring for people who are retiring right now. We used to have pensions. That used to be a steady paycheck. That's probably gone for many of us. And now the key is, do you have the raw materials, and are you getting the help that you need to build the retirement that you want? And in order to figure that out, Jay will provide you a no cost, no obligation meeting to sit down and kind of go through the numbers, figure out. You've probably been a really good saver. But how does all that become a paycheck in retirement? Can you get past 65 so you don't have to worry about Medicare? Retiring at 63 brings up a lot of challenges. And 64, 65 is a whole different story. So let's talk through all of those things. Use the website, which is retire210.com. There's a place for you to put some information in there, and Jay will reach out to you and sit down and talk through the details of your retirement. We thank you so much for listening today, and we will get you next time right here on Clear Skies Retirement.